Good morning, traders. It is Thursday, the 19th of February, 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Several news items overnight. Greece formally submitted its request for loan extension. We'll see a pop higher in across the markets during that time. The Eurogroup is to meet on Friday to review the document. The request says that the country is committed to fiscal balance during interim period under requested loan agreement extension. So they're committed to fiscal balance during the interim period. But they have not complied with that over the last few years, and that's why Germany is taking a hard stance on this. German Finance Ministry reportedly rejects Greece's request for extension of aid program. ECB denies capital control speculation related to Greece. That came out earlier. ECB's release its first ever minutes. ECB Fed minutes broad shared view that conditions in place for monetary action with the need to act diligently concluded that prior stimulus measures would fall short. So what am I getting at here? There's just a lot going on with the ECB right now. So that's what is driving a lot of our trade, and it deserves a lot of attention. The FOMC minutes came out yesterday. Dealers note that the FOMC language might hint to a currency war, and this is something I've been talking about for quite some time. That there is actually a currency war. If you look at the actions and the movements from the Reserve Bank of Australia to what Japan is doing, to what China has done, and so on and so forth. Basically, there's a proxy war that's in between. That's among the G7 countries. If you look at the U.S. dollar index prices, you'll see that we've moved from 80 to about 94 over the last several months. It's quite a move for a currency, making U.S. products more expensive. Initial jobless claims came in at 283,000 versus 290,000 estimated, so much better. Continuing claims 2.425 million versus 2.36 million, so slightly worse. And then finally, Walmart reported Q4 adjusted $161 versus $1.54, revenues of 130.7 billion versus 132.2 billion. Walmart has raised its dividend 2% from 49 to 49 cents from 48 cents. Looking ahead, the February Philly Fed business outlook is expected at 9 o'clock Central. It's a half hour after the open, expecting 9.0 estimated. Leading index at the same time expected 0.3%. And then at the same time at 9 o'clock Central, Eurozone February Advanced Consumer Confidence negative 7.5 estimated. At 9:30, 10:30 Eastern, we have EIA natural gas inventories, which are coming out at their normal time. However, because of the holiday on Monday, crude oil will be coming out at 10 o'clock Eastern, 10 o'clock Central, 11 Eastern. So look out for that if you're trading crude. Also at 10 o'clock, Treasury 2-year, 5-year, 7-year, and 2-year FRN announcements expected. And then finally at noon, the U.S. Treasury to sell $9 billion in 30-year tips. All we're left with tomorrow, Friday, is the Eurozone PMI as well as the U.S. manufacturing PMI. Let's switch gears and look at the technical chart here. That was a long news session there. So looking at yesterday, again, we start with the review of what we expected versus what happened. The primary expectation yesterday was an open auction on the open, which is what we got. We got an open auction in range, in value. The expectation is for this to push the overnight low. If you recall from yesterday's video, we expected it to push the overnight low, and it did. It went right down into the overnight low because the overnight low actually continued to move down after the trader bite was done. So if I look at the overnight session yesterday, it continued to make lower lows into the open. So early on, it pushed into the overnight low, tested both sides, and what we had then is the goal here was if it takes over the 93 quarter area and holds, it will likely test 96.75, this point of control above. That was the primary hypothesis. The outlook was for it to be a pretty quiet, choppy day, but the cutoff point is 93.25. If we stay below 93.25, then we're expecting 88.5. Where does 88.5 come from? I guess the better chart to show it is the 15-minute. The 88.5 is the micro composite point of control for those 2 days. So if I pull this back to where it was, you could see here that the point of control for these 2 balance days, the most traded price is 88.50 right here, this thick black line on this almost triple distribution profile, and the market went to 88.50 on the dot before it found buyers and then pushed to the other side to 96.75 and closed in the upper range. So yesterday's close was fairly decently bullish, not so strong, not so weak. The expectation again was, as I talked about the night before, or the day in yesterday's Trader Bite, this impulsive move here of 10.75 points, this impulsive move is incomplete, and we were looking for a higher high into the overnight session on Wednesday morning. We did not get that. We're still looking. We were still looking for a higher high in yesterday's session, but this has dropped pretty deeply, so that impulsive move was fairly canceled. Yesterday, however, it has pushed higher in a very, very slack way into that, near that high, and it looks like the overnight session just continued that on. However, when you look at the overnight session, you'll see that it's just basically sideways until we got the news on Greece, and then the ensuing reversal on the news on Greece. So we did manage to get that higher high up to 99.50. I want to remind you that the target since last week, the next measure move target up is 2103.25, and it's still on deck. We already took out the 2093 half target from back here. We went to 95, and we still have 2103 quarter to contend with. This got pretty close, but the markets, the overnight market is showing that selling is the dominant mode here, with the market basically skewing down from the open and then on the retest higher being rejected. So this is an excess high in the overnight session, and right now the dominant force is on the sell side. So to me, this looks like we are likely to continue that onto the open. So I expect this 2087 quarter to be taken out. The delta, as you can see overnight, is pretty decent selling. If we look at the overnight session only, you can see that the delta here, the delta is as low as it's been in quite some time. This is the lowest delta on the overnight all month, right here today. I think we're probably we're likely to see a pretty decent pullback today, and a retest of the levels we've left behind below. So where does this put us? The way things are shaping up right now, if I extend this micro composite out to include yesterday, 2091 is the new point of control from 2088.50. We're trading 2088.75. We're against the low of yesterday. The one-time framing up is likely to end this morning. You can see here one-time framing has been going on for quite some time now. The composite will show that better. Sorry for flipping so much. But if we look at the point from the 9th here, we could see higher low, higher low, higher low, higher low, higher low, higher low. We don't care about a higher high. We're just interested in higher low to determine if one-time framing is in control. We also have compression in the range. You can see here that the range is compressing, 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 with the lowest range being yesterday at 9 points. Pretty dismal. We also have compression and volume. So what you have here is classic balance. Balance leads to what? Balance leads to imbalance, and the market's consolidating. And what it's likely going to have to do, given the fact that ranges have compressed and volume has compressed, is in order to entice buyers, the market's only recourse right now is to advertise lower prices, which means selling. So I'm looking for the market to open somewhere just inside or just outside of yesterday's range, yesterday's low. The expectation early on is for a responsive buyer back to 2091 and then potentially to 2092.75, but I'm going to be a seller. This, of course, is barring any news effect. The news changes things. Participants have to reevaluate the value of a product based on the news and the anticipated effect that that news will have. So I cannot be held to what I'm saying here if news does come out. But as far as I'm concerned, I'm going to be stalking on the short side today and targeting the levels that we have below. So initially, we're going to look for the last low we had, which was the 86.25, which coincides with a small CHVN at 2086.75. So that's the initial target, and then the next target will be that 82.75, and so on and so forth. And then we come back into the microcomposite area, with the extended target being this gap zone. We have a gap between 71.75 and 69.75. We have a 2-point gap here. So 2068 would be the extended target from here. That puts us 20 points away, which is a pretty decent potential if we do get some decent selling. Again, we've made new highs at 2098.75 from 2088.75. So we've pushed the high, the previous high from back here, 10 points. And the tradition is that once we push new highs, we tend to lose our buyers, and we need to advertise for them. And so we need to push lower to bring those buyers back in. And the key area, again, is this 2068 area as a key target below. You want to note that down in your chart somewhere. Again, these are not trade recommendations. I'm sharing with you my view and the reasons for my plan, and that's the primary hypothesis. It's 8:15. My time's run out, but very quick, I'm going to go over the Euro stocks. You can see the Euro stocks are following the plan as expected. We've had balance for quite some time. Balance broke to the high side. We're in a CLVN zone still up to this 35.40, 35.50 area, and has pushed into that 34.87 naked point of control that I discussed a couple of days ago as the first target. 3,500 is behind it. It's continuing to push into that LVN zone as expected. LVN zones are previously poorly tested areas, and they attract, when you get into an LVN zone, which is like a gap, you kind of, in general, the market tends to continue in that momentum till it tests the other side, unless news changes that view. But we have pushed up against the 3,500, which leaves us with just another 40 to 50 points. Remember, I've been talking about this 3,500, 3,550 since we were down at 33.40 and in this balance zone from back here, this composite here dashed yellow. Crude oil. I believe crude oil is still in a breakout formation. This is just a beautiful W formation here. It is resting, but I believe that it still is likely to continue higher with a target of 56.77 above, and that's what I'm looking for. Crude oil is trading April 2015, just so you know. First notice day, I believe, was yesterday. So you need to clear those positions if you're swinging crude. You need to roll that position to April. Good luck today, and watch your risk as always, and I'll catch you tomorrow. Take care.